gold going higher. I do expect gold to head up towards $3,000 before all is said and done, maybe higher. I expect silver over 150. Maybe closer to 200 before all is said and done. And then my mother explained to me about this concept of inflation, which was really quite high. This was the 70s in Mexico, which was the US on steroids. So long story short, I understood this. I was horrified. I immediately, as soon as I could, went to the bank and exchanged my pesos for dollars that I had earned. And not long afterwards, there was a devaluation. And I don't remember the exact numbers, but it was literally on the order of a double overnight. Like bank holiday, next day, your money's worth half of what it was. And just like this feeling of like, oh my gosh, saved by the bell from this devaluation. I'll never forget that. And then here's the kicker is this was 70s, early 70s, come back to the US in 1979. And what's going on in the US in the late 70s, super high inflation in the US dollar. And that's what really got me to think that, all these funny money pieces of paper, these fiat currencies, they're all untrustworthy. And that's when I started converting my lawnmower money, savings, and so on into silver. Pretty much silver for me at the time. Though I converted earnings. Like that was my savings at the time. I converted earnings to silver coins, even pre-65 junk silver, whatever I could at the coin shop. And here's how I see it. I don't buy gold because I want to trade on higher inflation. I don't want to buy gold to sell next year because I think inflation is going to be higher. I want to buy gold because it is gold. Because no matter what happens to the currency, an ounce of gold is still an ounce of gold. And it can be used to make XYZ number of rings or gadgets or whatever. It's one of the 92 naturally occurring chemical elements that has unique and distinct properties, and it has a certain value. So you look at it over not just decades, but centuries or thousands of years. And there's a famous thing, I can't substantiate this, but it's often said that 1 ounce of gold is roughly equivalent to the price of one really good suit across millennia. Or something like 300 or 400 loaves of bread or something like that.
Right.
And I just learned at the supermarket the other day, and I think that actually still holds true. So,
or several hundred Big Macs.
Or several hundred Big Macs. Actually, yes. If you look at the noise, longer term, that the gold Big Mac ratio is flat actually says what I'm saying. A Big Mac is a Big Mac, and you can eat it. An ounce of gold is an ounce of gold, and it has certain uses. That's the reason to own it, because it is real and it doesn't change. There's a lot going on. So real quick, there's been all this transitory talk, transitory, and the year base effects. We all understand that. But there are some really key numbers coming up soon. And the next CPI number, I think it's quite possible that since last month was the peak year-on-year base effect, that the year numbers will go into retreat. But watch the month-on-month change. Because ask yourself, has anything really gotten cheaper over the last month? No, well, maybe lumber. But generally speaking, nothing's gotten cheaper. So the month-on-month CPI numbers, core CPI numbers, the numbers the Fed looks at, I think will tell a very strong story that should really send a few tremors of fear through the powers that be. So watch these numbers, discount the year-on-year changes, look at the month-on-month changes. This could cause some real fireworks. We also have the Basel III implementation coming up if they don't delay it. That's interesting and a whole huge big topic. I don't subscribe to some of the grand visions of this that some people have put out there, but this is significant. There is a rule change coming, and it is supposed to be implemented by the end of June, and it will affect how banks treat and hold gold. And apparently, the World Gold Council and the LBMA sent a letter into the powers that be saying, hey, this is going to screw our business. We need an exemption here. And if they don't get it, that could cause changes in the futures markets, which I think a lot of gold bucks would, maybe welcome. So that's interesting. I'm not going to predict how it's going to come out. The Basel III keeps getting delayed. Maybe gets delayed again. Because I understand it. I'm not a central bank expert, right? I'm not one of those economists that's focused his life on central banks. So probably get somebody more expert than me in here. But reading the same articles that you and our audience probably have, I understand the overall implementation is scheduled for January next year. But this rule about, the NIRC or whatever they call it, this rule about how you treat gold as reserves, that I understand is supposed to go into effect on June 28th. And that does have an impact on, the LBMA and the COMEX and how they account for their allocated and non-allocated, reserves. I mean, they're not a bank, strictly speaking, so I could actually see them getting an exemption. But right now, it could cause them some heartache, which would be interesting. And, if their requirements were increased, I think most of us out there that would like to see better price discovery in the gold and silver markets would see that as a good thing. I think this is really important, David. People, they get all upset about the price and what it should be, what it isn't, who's manipulating it, what's going on. And I understand that. I hate being ripped off, so I get that. But my job, what I'm trying to provide for your audience and mine, is guidance that helps us make money as speculators, as speculative investors. So I'm not here to debate the philosophy of the price discovery mechanism. What I'm saying, and what you've just shown on those charts, and if you look at the averages, I mean, look at gold. Gold over $1,900. That's a great price. But the average over the last year is around $1,840. That's a fantastic gold price. Most of the gold mines in operation now were designed at the $1,300 price or even lower, and they're now operating based on price assumptions that are way lower than what we're realizing now. And this isn't a peak. Okay, the 1900 right now is a short-term peak, but the 1840 price I'm talking about, that's a year-long average. These guys make tons of money at that price. And 2450 for silver, people get all upset about silver not being higher. But the silver miners, the better ones, they learned how to make money at less than $20 silver. And for it to average over $24 for a year, that's a fantastic silver price for the business. Never mind, the philosophy. If the goal is to invest in good businesses that can see share price appreciation, if we're right about the metals prices going higher, then this gives us a tool. Look at who was able to make money over the last year, COVID and all. If they could survive all the ups and downs of 2020, that's a great tool for stock picking. And those companies will be poised to do even better if we're right about gold going higher. I do expect gold to head up towards $3,000 before all is said and done, maybe higher. I expect silver over 150, maybe closer to 200 before all is said and done. But those are peaks. The longer term average price, we can make money there. And we can see which companies can make money there. We can see which exploration and development projects can make money where we are now. So there's opportunities to make money here that I think that people just don't do themselves a service if they get all, bent out of shape over what the prices are or should be, instead of looking, how can I invest where things are now?